So welcome to the Mills and Reed Immigration Update webinar at a really topical and significant time. So what are we going to be doing today? Just a bit of housekeeping first. We'll be here for about 45 minutes this morning. We'll have a recording available afterwards, technology permitting, which we'll try and send out with the slides afterwards. If you've got any questions as we go through, do please pop them in the Q&A box, not the chat box, but the Q&A box, please. And we'll try and pick out some of those and some themes as we go through. We've got a lot of people on this webinar, so it may well be that we can't cover every question that's asked, but we'll certainly try and look at the key themes and pull some of those out at the end. As I say, we'll send out the slides and a recording of the session if it works at the end. Great, so what are we going to be doing this morning? Well, no surprises, given the timing of this webinar. We're going to be spending a good chunk of time looking at the changes to the work visa routes that were announced last Thursday and which are kicking in on the 4th of April. So we had those announcements originally back in December last year, and then the detail published last Thursday. So we're going to be spending lots of time looking at that, and that will be the bulk of the session today, going into it in quite a bit of detail because it is fiddly. They are significant changes, probably a bit of a sort of wet, cold towel over your head as we go through that, but I think you'll find it useful. We'll then look at some other recent developments, so looking particularly at some changes to the standard visitor route, particularly around permitted activities, and also a bit of a recap on some illegal working civil penalty increases that are worth noting because they are significant. And we'll do a bit of a horizon scan on future developments as well. At the moment, lots in the pipeline, so plenty of things for us to be looking at. So that's our agenda for this morning. I say any questions, pop them in the Q&A, and we'll see if we can pick out the key themes towards the end of 45 minutes. Great, so what are the latest developments? It's probably helpful, isn't it, to have a little bit of context in terms of where we're at. So the government's agenda is very much around, at the moment, reducing net migration, both on the legal migration side and also on the illegal side of things. So both are being focused on. And the context of that, as you're probably aware, is I think for the year to June 2023, net migration is about 672,000, and that's significantly above the 300 to 400,000 net figure that was in place year on year before the pandemic. So really significant increases, most of that around study and work visa routes. And interestingly, lots of it driven by non-EU migration as well. We've already had some changes linked to that. So as you'll probably be aware, at the start of the year, there were changes to the student visa rules and particularly restrictions on dependents of students coming into the UK, increases in fees, increases in the immigration health surcharge. But there's more down, in the pipeline through these changes and further changes into the future over the next year or two. So what we had is the announcement on the 4th of December last year, this 5-point plan to reduce net migration. And then we've had a lot of kind of chaos and frantic applications since that date, people trying to get in under the current rules, creating all sorts of pressures, as some of you will know, with the use of the priority service and so forth for getting additional certificates of sponsorship. And then what we've had on the 14th of March last week is the detail of the changes being published. And it is pretty significant because they're much more nuanced than the initial announcement last December suggested. And there are a few unexpected bits in there as well. Not all bad for employers, some helpful, as we'll see as we go through. It is fair to say it is a really sweeping set of changes to the main work visa route, the skilled worker route. It's the most significant change since Brexit. So you might remember following Brexit, we had the tradable points system come in, the lower salary thresholds in various cases, the streamlining of processes with the abolition of the resident labour market test, reduction in skill level for roles that qualify for visas, making it much easier to recruit from the global labour market. And these changes do mark a significant tightening of the ability of employers to sponsor for many roles, as we'll see. If you're very keen, you can dig out the statement of changes that was published last Thursday. It's just over 300 pages. I had a lot of fun with it on Sunday. I can recommend that if you'd like to do that. But actually, once you get into it and look at the detail, it does start to make sense, as hopefully you'll see as we go through today. Great. So let's get stuck in, shall we, to the changes to the work visa routes. That's what we're focusing on today. We can't do everything today. There are other changes touching on the creative worker route, the scale-up route, the seasonal worker, partners of British nationals. We're not going to touch on those today because they're not really relevant to most of us on this webinar, but there are some changes in those areas as well. Just before we dive into the changes, I just wanted to do a quick recap of some key concepts around how salaries work for sponsorship, because this is really where all of the changes bite and where there are some difficulties working things through. You've got, haven't you? You might remember 2 salary thresholds that apply when you sponsor somebody for a skilled worker visa. You've got what's called a general salary threshold and a going rate threshold. And what you have to do is you have to make sure the person is paid at or above both of those rates. So essentially, whichever is higher, if you like, is what applies in very simple terms. The general threshold is currently 26,200, and there are discounts available in various circumstances. If you've got a PhD relevant to the role, the roles on the short occupation list, and also what are called new entrants to the labour market. And the actual earnings that the person receives, irrespective of their working hours, must always be at or above the general threshold. You've then got the going rates, and they vary depending on the role, and the details for those are set out in the SOC codes for the role, which are in Appendix Skilled Occupations available online. So depending on what role it is, there will be a different going rate salary reflecting what the labour market sort of pays on average for those roles. And again, like the general threshold, you have discounts in various circumstances for PhDs, roles on the short occupation list, and new entrants. And this can be prorated, the going rate, to account for the person's working hours. And you have to meet those criteria in order to get the 20 tradable points for sponsorship. And what we've got here with this set of changes is significant changes affecting both of these salary thresholds. So what are the changes in headline terms before we dive into the detail? And we are going to go into a bit of detail, so we try and get our heads around. So we'll look at it in headline terms, a bit more detail, and then look at some worked examples. So hopefully you can see how it works. The general threshold that I just mentioned, that is increasing from 26,200 to 38,700. Really significant increase based on UK media and the latest ONS pay data. That was flagged last December, we know about. The going rates are also increasing, and I think, interestingly, this is probably the most significant change in practice to this set of changes. So the going rate's increasing from what they call a 25th percentile to the 50th percentile, so take the median earnings for the particular occupation in question, and also based on the latest ONS pay data. So what you've actually got is some quite significant increases to going rates because of that increase in the percentile, taking it up to the median earnings rather than 25th, and also because of the inflation that we've had in recent years and some significant increases to salaries in some sectors. They are pulling through to the going rates. So some of the challenges that you're going to face as employers is not necessarily around the general threshold, but around the increase in going rates, as we will see. Big news, this is probably the biggest news in terms of the detail of the announcements, is that we are still going to have a tradable points system. There was a bit of uncertainty about that, providing for salary discounts in certain circumstances. So you will still get discounts for the salaries, both on the general threshold and the going rate. If you have a PhD relevant to the role, or PhD in a STEM subject, or you're a new entrant into the labour market, and national pay scale roles will continue as is essentially. But there is no discount any longer for the immigration salary list roles. The immigration salary list replaces the shortage occupation list. So you still get a 90% reduction for a PhD relevant to the job, an 80% reduction for a PhD in a STEM subject relevant to the job, and a 70% reduction for a new entrant, but no reduction if your role is on the immigration salary list. That is really significant because what obviously it means is we haven't got this headline scenario of sort of everyone having to be paid at least 38,700. As you'll see, there are lots of circumstances where you can pay significantly less than that, depending on the role, and particularly if transitional rules apply. Transitional rules, the final one on there, they will apply for individuals where the certificate of sponsorship was assigned before the 4th of April this year. So you assign the COS before then, the transitional salary rules, which we'll look at in a moment, will apply. And that means you have a lower general threshold of 29,000 rather than 38,700. That's gone up to reflect inflation. And also some transitional rules around the going rates, although as we'll see, they are increasing significantly even for these transitional rules. That's significant because these will obviously apply to individuals that you're currently sponsoring enrolled, or as I say, those where you assign the COS before the 4th of April this year. So lots of interest to your existing sponsored employees. What you essentially have is an additional tradable points table. So you've got sort of one table which says these are the going rates under the sort of the new rules, the default new rules, and then you've got a second table which says these will be the going rates where the transitional rules apply, and they are lower, as you would expect, so that you haven't got people hitting the buffers who are sponsored by you already, hopefully, and not able to extend their visa. So I'm going to go through the detail of this so you can hopefully get your head around it. And then, as I say, we'll look at some worked examples. So stick with me. It's worth doing that because I think once it kind of percolates, you do start to kind of get your head around it and see how it's going to work. So I'll go through each of the tradable points options, and you'll see what I've done. I've essentially put the new rule option, and then I've put what's going to be the option that applies under the transitional rules. So, for example, in the first one, option A is your kind of your option, the new rules, and option F is the one that applies under the transitional rules, and they're set out in these tables. So the default position, as we've seen, is 38,700 as the general salary threshold, significantly increased based on the 50th percentile. But the transitional rules, so for those you're sponsoring already, let's say, 29,000 and the going rate based on the 25th percentile. So you've got a lower going rate that's applied in terms of the percentile, albeit it is based on the up-to-date figures. So going rates are going up. That's your default position. But if you're in a circumstance where, there are certain characteristics of the individual or the role, then you can have lower salary thresholds applying, as we've seen in headline terms. So you've got a PhD relevant to the job. That's option B or G for the transitional rules. So you'll see the new general threshold, 34,830 up from 23,580, and 90% of the going rate based on the 50th percentile. But the transitional rules, quite a lot lower, you'll see. So 26,100 and obviously 90% of the going rate based on the 25th percentile. So you've got that 10% reduction if the PhD is relevant to the job. PhD is in a STEM subject, you get that 80% reduction. So again, you see from the, I'm not going to read all the figures out, but you'll see on the slide, how that works. So under the transitional rules, 23,200 as your general threshold, and 80% of the going rate will apply to the going rate threshold. So you can see already, can't you, how, depending on these factors applicable to the role or the individual, how you can benefit from these lower thresholds. All the jobs in the immigration salary list, that's the replacement for the shortage occupation list. So the new rules applying from 4th of April, 30,960. So obviously significantly down from your headline 38,700. And the going rate based on the 50th percentile. And then transitional rules, which apply much lower, as you'll see. So only 23,200 as your general threshold is what you have to meet. and the going rate, again, based on the 25th percentile, so not as high in terms of the going rate point as the case of being sponsored for the first time from the 4th of April this year. So hopefully you're starting to see already how the existing tradable points system, yes, the salaries are going up, but you've still got this variation, and depending on those circumstances. The new entrant, again, so somebody who's under 26 when they apply, or switching from the student or graduate route, or going into a postdoctoral research position, or certain other limited circumstances. Again, so option E is, if you like, the new option. Option J is what's applying on the transitional basis. So again, you'll see that the general threshold, 3960, okay, that's an increase, and 70% of the going rate based on the 50th percentile. And then the transitional rules, again, a lot lower. You see that, 23,200, and only 70% of the going rate, again, based on that 25th percentile rather than the 50th. And then you've got the final category, so jobs in listed health or education sector roles, so sort of national pay-spine roles, NHS roles, gender for change, those sorts of things, not really affected as significantly. So what I've done to try and bring that to life, I appreciate it's a bit dry and a bit fiddly, is just apply it to some roles, which we often come across and which I know are applicable to lots of us on this webinar at the moment. So just to take these examples, so 2119, so that's the stock code that applies for research roles in universities, and indeed lots of research roles more broadly in the economy, and where there was significant concern, how is this going to work? Are we going to end up with this sector being decimated, universities potentially not being able to recruit because of this 38,700 threshold that was being talked about? So under the new rules, and all this is set out in those tables, so I've pulled this information from the tables that are published. You can see that the new option A going rate for these roles is 41,200. So that has increased significantly from the current going rate of 34,600. So, you'll appreciate that 41.2 is above 38.7, so you have to be paying 41.2 for a 37.5-hour week in a research role that falls in SOC code 2119. But to go to the other end of the tradable points spectrum, so the 30% reduction that you qualify for as a new entrant, you'll see that takes that going rate down to 30,960. So very significantly down, and that's in line also with what the general threshold is in this particular case. So for a new entrant, the salary for a 37.5-hour week only needs to be 30,960. But significantly, look at these transitional going rates, and I've put them there on the slide. So where the COS was assigned before the 4th of April this year, so COS is assigned for that date, your employees already sponsored for their roles, you'll see how the tradable points options are much lower. And all of these are above the general salary threshold that applies. So you'll remember you have to pay at or above both the general salary threshold and the going rate. All of these going rates fall above the applicable general salary threshold on the transitional rules basis. So your default position, no PhD, etc., no new entrant, is 32,000. So quite a lot lower. If you've got a PhD relevant to the role, 28,800, the STEM one, 25,600, and the new entrant, if you're able to extend the person, bear in mind you've got a 4-year maximum taking into account time as a new entrant in skilled worker and in the graduate route as well, it's 23,200. So hopefully that gives you an idea that existing employees that you've got, you're not ending up in a situation, hopefully, where you're going to have significant problems extending their leave in the UK because of those transitional rules on the going rate thresholds that apply as set out in this second table that is published in the statement of changes. Or take another example. So 2134, programmers and software development professionals. They're one of the main SOC codes that lots of our clients, and I know lots of you use when recruiting software professionals. They're tweaking some of the numbers, as Mark will come to later. It's going to be number 2134 replaces current 21336. Really significant increases in the salary thresholds here because of the increase in the ONS data to salaries in the economy to this sector. They've rocketed for IT roles in recent years. So you've got, your headline going rate, your default position option A, 49,400 up from 34,000. Huge increase, albeit I think that does reflect what most sponsors are paying, because that is just what the market is dictating. You no longer get a shortage occupation list discount. So that 20% reduction that applied to the general threshold and the going rates, that has gone, as we saw earlier, not applying any longer. But again, going to the other end of the spectrum, so the maximum reduction of 30% for a new entrant, that takes your new entrant rate down to 34,580. So, again, quite a range there in terms of what the salary is that needs to be paid, from 34,580 to 49,400, depending on the circumstances. And again, you've got some transitional going rates which will apply. So again, your default option, so the person sponsored under option A, at the moment they don't have a PhD, not a new entrant, etc. Your default position, that's 36,300, so significantly less. If they've got a PhD, even less. STEM PhD, even less. Again, new entrant, even less at 25,410. And because the role was in the short occupation list under the old rules, there's also provision for you to benefit from a lower salary threshold on a transitional basis because of that immigration salary list angle of 29,040. So I'm not trying to hopefully I'm not bamboozling you with too many figures here, but just giving you sort of a sense of what the spread of salary thresholds actually are, depending on the role, depending on the circumstances, and depending on whether the person's already sponsored and qualifies for these transitional provisions. You're not having to pay 38,700 in all cases. Two final examples, just to have a look at. So 3556, sales accounts and business development managers. So one of the the very common codes used for lots of sort of sales and marketing, BD type roles. Again, a really significant increase in the going rate that is applicable to these roles. That's going up to 52,500, up from 35,100. So a huge increase. Again, reflecting what's happened in the economy, and these increases vary from role to role. So across the different codes, the rate of increase is different, just depending on what the latest salary data says. But again, take it to the 30% reduction, so the maximum reduction you can have for a new entrant. That does take it down to 36,750. So again, your salary range essentially is between those two figures, depending on the circumstances. Yes, that's an increase from 24,570, but not as bad as you might have thought. And again, you've got transitional going rates that apply as set out in that second table. So your default option, 39,100, obviously a lot less than 52,500, and the new entrant, 27,370. And again, both of those are above the general salary threshold that applies for the code. So you've got, you're able to be actually paying at those rates for 37.5-hour week and sponsoring if those transitional rules apply. PhD points can't be claimed for that code, which is why they're not included on there. Or the final one I thought you might be interested in as HR professionals. So 1136, human resource managers and directors. So salary rates haven't gone up quite as much, it seems, which probably is a source of frustration for all of us. But option A going rate, so 49,400 up from 36.5. You can have a PhD relevant to the job. I'll put that in there for interest for you. So again, you have reduced thresholds in that case to just under 45,000. And again, with a maximum reduction if the person's a new entrant, so under 26, switching from a student or graduate visa, let's say, it goes all the way down to 34,580. And again, you've got these transitional going rates for people already sponsored enrolled, so your existing employees, or where you assign the cost before the 4th of April. 39,400 is your default option. And again, you'll see the figures go down depending on the circumstances that apply. And again, all of those figures are above the general salary threshold that applies. That is the higher of the two in those circumstances. So that is the salary that you need to be paying for a 37.5-hour week. So what really we've got in a nutshell is the existing tradable points system tweaked. So we've still got, save for the elimination of the reduction, the shortage occupation list role, we've still got tradable points at the same rate of reduction in all of the circumstances that we have it at the moment. PhD, STEM PhD, new entrants to the labour market. And that means that, yes, the salaries have gone up because of the fact there's been this increase in the percentile that you're looking at in terms of the going rates, how they're calculated, and because of the ONS data around salary increases in the broader in the economy as a whole. But you've still got some flexibility and variation in terms of what can be paid depending on the circumstances. We'll come back to some practical points around things to do now in a moment, but Mark's just going to pick up some other key changes and link to some of these points that we've touched on already. Mark.
Thank you, Alex, and good morning, everyone. Obviously, the increase in salary thresholds are the most significant change that's coming into play here, but there are some additional changes that have been made around the edges, which may well be relevant to some of you and certainly worth highlighting. So we've listed a few of them on the slide for you here, beginning with supplementary employment. So the way that this currently works, and sort of a quick reminder for you, I suppose, individuals who are here as skilled workers can undertake supplementary employment. So above and beyond the employment that they are sponsored for, that their visa is based on, they can do up to 20 hours per week. In addition to that, they have to do so outside of their normal working hours, so it cannot impact the sponsorship arrangement that they have in place that they apply for their visa under, but they can do another 20 hours per week. However, it is currently the case, and it has historically been the case, that there are restrictions on what work can be undertaken. So an individual who has a skilled worker visa can do supplementary employment in a shortage occupation role, any occupation that's currently on the shortage occupation list, or they can do supplementary employment in a role that is in the same occupation and at the same professional level that they are actually sponsored for. So to give a practical example, to use myself, if I were a migrant worker, I could undertake supplementary employment above and beyond my employment with Mills and Reeve. I'm obviously a legal professional, so it would be in the relevant SOC code for legal professionals, and it would have to be at an equivalent role in terms of seniority to my current role here. So I could do that out of hours for up to 20 hours. Obviously, all kinds of regulatory and confidentiality issues aside. My visa would allow it. It would also allow me to be, for example, a software developer, excuse me, that's currently on the shortage occupation list. So if I had the necessary skill set, I could do that as well. But really, it would be quite limiting. The change and the significant kind of relaxation here is that from the 4th of April, individuals who have skilled worker visas can undertake supplementary employment in any occupation as long as that occupation is eligible for a skilled worker visa in any case. So any occupation code that is on the list in terms of appendix skilled occupations, an individual can do supplementary employment in that role. So again, to use myself as an example, I could be a chef for argument's sake. or I could work as an engineer. Really, it doesn't have to be linked to what the sponsorship is whatsoever. And that's a really significant change. The reality, and it was a silly example, but it was deliberately chosen. The reality is, in many cases, supplementary employment isn't possible because you're not going to really be able to work in the exact same sector that you're currently in, for competitive reasons. You're not going to be able to work for a competitor out of hours. But this relaxation gives far more scope to skilled workers supplementing their income if they need to, taking on additional work for whatever reason, but also for employers to actually make use of the fact that individuals who have a skilled worker visa can undertake supplementary employment for them as long as it's outside of their normal working hours with their main employer. So quite an interesting change, certainly not one that we'd foreseen. We've got here a tightening of many rules, but actually this is quite liberal in terms of its application of skilled worker requirements. Moving on then to the immigration salary list, Alex has already alluded to this. So just to confirm, we've had in place for a long time the shortage occupation list. There have been various perks that go along with being on the shortage occupation list, most notably reduced salary thresholds. With these changes, shortage occupation list is being removed. It's being replaced with an immigration salary list. That list is smaller than the existing shortage occupation list. It's quite similar, actually. It's based on the MAC recommendations, and essentially what it's done is take away the IT-related roles and the engineering-related roles, and it's pretty much the same apart from those omissions. So relatively similar, new name, but most importantly, as Alex has already pointed out, there's no longer a discount to the going rate for those roles. So the utility of that list is obviously greatly reduced because you no longer get that salary discount if you're on the new immigration salary list. And then finally, again, as Alex has alluded to, all of these changes are based on the more up-to-date standard occupational classification code. So we're now dealing with SOC 2020 rather than SOC 2010. And we saw some worked examples of that on the previous slide. Software developers, changing from 2136 to 2134. There's also been a couple of questions in the Q&A box about this. So just to pick up on this point, these changes will mean that you are going to have to reassess roles, make sure that they are now still, reflective of your previous practices as you sponsor people moving forward. Are you doing so in the correct code? A good example that was given in a specific question actually was around 3539, and the fact that actually that code had previously been something of a catch-all for lower level business professionals. And now those roles will potentially fit into one of multiple new codes under SOC 2020. So perhaps an exercise there moving forward in terms of, beyond the 4th of April when you are sponsoring individuals, just checking that the codes that you've used previously do still apply. But that's for new individuals. Importantly, for those who you're already sponsoring, where we have those transitional arrangements in place, so anyone who's already sponsored by you and is extending their visa, and that also applies to anyone you assign a cost to before the 4th of April, the transitional arrangements will apply, and actually they can continue on their existing SOC code. So to use the software development example again, just as it's all fresh in our minds, if you have a software developer who you sponsored under SOC code 2136, and they're due to extend their visa next year, you can still sponsor them under SOC code 2136 in accordance with SOC 2010, rather than moving them to code 2134 under SOC 2020. So it's not just the salary that's impacted, it's the SOC codes as well. They continue under the transitional arrangements. And then very quickly, just to make note of the other kind of most significant sponsored route. So that's your global business mobility senior or specialist worker, as it used to be called, ICT visas. So really the headline here is that the changes aren't as significant. We've got a lot going on with the skilled worker route, but actually for global business mobility senior or specialist workers, it's more or less business as usual. We've put some notes on the slide here, but as you can see, a very slight increase to the general salary threshold. The going rates are going to be continue to be under the 25th percentile rather than the 50th, albeit they are being updated for current salary levels in 2023. But that's still more beneficial than the moving to the 50th percentile. High earner threshold is unchanged, so that's the threshold that allows people to come in for longer than 5 years. So high earners can be here for 9 years in any 10-year period. And also, notwithstanding that the changes aren't really that significant here, the transitional arrangements will apply here as well in the same way that they do for skilled workers. So if you are sponsoring under the senior or specialist worker category within the global business mobility route, actually, you're not really going to see as much impact as if you're sponsoring skilled workers.
Great, thanks, Mark. So where does all that leave us now in terms of some practical considerations? If you want the current rules to apply to the person in terms of the sponsorship, so the current salary thresholds and all the other bits and pieces, they need to lodge their application on or before the 3rd of April, i.e. before the changes kick in on the 4th of April. So clearly, if you've got people in the pipeline, people can get in the pipeline to get through later is the sensible thing to do. There's obviously limited time now to do that. It seems clear that it is the current rules that would then apply. That if you assign the COS before the 4th of April, but the application is lodged after the 4th of April, that the transitional rules would then apply as well. So you've got some sort of slight benefit there as well in terms of that. So review the pipeline and apply ahead of the changes taking effect if you want the current rules to apply, if you're going to have a problem under the that means that you will, if you've not done so already, want to think about making a request for an additional undefined certificate of sponsorship allocation. So if you've not got enough certificates to do that before the 4th of April, that's something to think about. As lots of you I know have recently, it's very difficult to get an increased allocation through quickly. There's huge demand on the priority change of circumstance service for that. It's difficult to do. But something to try and do if you can, make use of the priority service if you need additional calls. Obviously, consider bringing forward sponsorship of students and graduates where there may be difficulties with the salary thresholds. And I think analysing occupations is a really important thing to be doing. So you can look at these tables now. You can think, okay, well, what are the rules that are going to be applying and salary thresholds from the 4th of April onwards? What are the transitional rules that will apply in respect to people we're currently sponsoring who will be extending in future, and people where we assign the COS before the 4th of April, but they don't apply until after the 4th of April. Look at those tables, work out, well, where have we got a problem? Are we going to have to be thinking about salary increases? Are we going to have to be looking at new recruitment pipelines, options for getting people in, whatever it may be? Because there will be some roles where there are going to be significant problems sponsoring in future. You're able to do so. Worth looking at other routes. Are there other options available? If you're in the education sector, is global talent an option? It will be in many cases. Talking to people about whether they've got personal circumstances that may mean they can get in a different route. Have they got somebody being sponsored as a main applicant as a partner? Could they be then coming to you as a dependent if the role with you is the trickier of the two to be sponsoring for, and so forth? And I think messaging for existing employees is really important. There is going to be lots of uncertainty and concern around what is going to be happening, what's going to be my position when I have to extend in future. You can now start to look at what that information is, what are the rules that are going to apply, what salary you're going to have to be paying. And that also applies, we're not able to cover it today, in respect to people who are applying for indefinite leave to remain, so the salary thresholds that would be applicable for them to make a successful indefinite leave to remain application when they get to that point as well. So lots of things to be doing, some time pressure on getting applications in by the 3rd of April if you want to benefit from the current rules, and assigning COSs before the 4th of April if you want to be able to benefit from the transitional rules on extensions in the future. Patricia.
Thanks, Alex. Good morning, everyone. I'll really briefly go through some other changes, for example, to the standard visitor route in relation to permitted activities. So, for example, those who visit the UK can work remotely, provided the work is not the main reason for their visit in the UK. That's a very welcome, clear change in the rules. And the intra-company activities, there is no restriction on working directly with clients. It has been removed, but the client-facing activity must be incidental to the visitor's work abroad, and it must not amount to the offshoring of a project or service to their overseas employer. There's also the change with respect to scientists, researchers, and academics. They are now able to conduct research in the UK as part of their visit, but this only applies to those coming to the UK under the standard visitor visa route and not to academics applying for a 12-month academic visitor visa or those who apply to come to extend that permission to be in the UK. That's a very important point. And then there we go on to the permanent paid engagement. You no longer have to apply for a visa. It has now been included in the immigration rules, but you have to remember that you must have the activities must be arranged ahead of time before arrival. They need to be formally invited. That you'll need a letter. They must complete the activity within 30 days of arrival. But within the permitted paid engagement, we now have a speaker can come to the UK to give a one-off or short series of talks and speeches where they have been invited to a conference or other event, and that is allowed, and they can now all use eGate rather than have their passport stamp when they come to the UK. So that will make the entry process much easier and quicker for them. So that's very welcoming as well. Alex mentioned the civil penalty increases. The maximum penalty now for employing someone who doesn't have the right to work in the UK, if you haven't carried out the right to work check the way the Home Office expects you to, it will be a maximum of 60,000. You'll recall it was 20 before, and the starting point for a first breach will be 45,000. It used to be 15. So that is again a big increase, and again that's per I hate using the word, but illegal migrant, that they don't have the right to work in the UK. So that's very important thing to remember. But also as a sponsored, this is a fundamental sponsor duties to actually carry out that check from the outset anyway. Alex, did you want to say anything, or shall I just move on to what's on the horizon briefly?
All right.
Yeah. So just quick one. The government, I find that a bit interesting. The government commissioned the MAC, the Migration Advisory Committee, to undertake a rapid review of their immigration salary list ahead of their statement of changes published last Thursday. And MAC will be carrying out a full review later this year. And watch the space to see how it will change the labor market and possibly the salary. They will carry out a more thorough review of the current salary and speak with the government about this. And then there's also, by the end of 2024, you will have heard there's the Electronic Travel Authorization ETA scheme that is currently being implemented. Currently, nationals of the Middle East countries such as UAE, Qatar, Jordan, Kuwait, Oman need to apply for it, and the government is hoping to roll that out to everyone by the end of the year. And the other change is with respect to BRP. If you sponsor migrant workers, you probably have noticed that, or we discussed that before. They are trying to phase out physical immigration documents. So all the BRPs that are currently being issued or have been issued for quite a while now, they all have the expiry date of 31st of December 2024. Bearing in mind that this is the date the BRP expires, not necessarily their visa expires, but the Home Office will be, well, supposedly will be in touch to actually replace those BRPs with a digital e-visa before that date. But as soon as we have more details, we will, of course, share that with you. And the other one is regarding improvement to the sponsor license system. We are hoping that the Home Office will keep improving the sponsor license system, like the SMS that you use. They have recently made it more easy to add a level 1 user, for example. Usually you're automatically added, so you can have access to the SMS. As of the for those whose license is expiring on or after the 6th of April, you will no longer have to renew the license. It will be renewed automatically for 10 years. So that is, again, another welcoming news. But for that one, we would advise that please do monitor when you're look at your license summary, monitor when your license will be expiring, and don't assume that it will get in touch, or just monitor on your license whether it has been renewed or whether you will fall under those new provisions. And the last one, well, we all know that there's the general election coming up. And immigration is always a hot topic as part of the election. It's unlikely to be more restrictive in terms of immigration rules, and we think they will be looking at have more economic consideration going forward. So will the MAC full review of the shortage salary immigration list. But that is certainly some changes that may come ahead. We may see some change in policy directions, but watch this space on that one.
Just leaves me to say thank you very much for joining. Great to have you all with us. We'll have one of these updates again soon. And as always, we're interested to know any things that you'd like to talk about, have covered. Do drop me a line, and we'll try and weave those points into any sessions that we're doing. Otherwise, thank you very much. Great to see you. Have a good day.